Hi all, I am Gowrishankar Iyer from Wealth Quotient. Fundraising for SMEs have always been a big challenge, and moreover, whenever an SME had to raise funds, the first option has always been debt. Today, SME IPO is becoming one of the best options for an SME to raise funds. It is evolving. To understand more about that, today we have CA Vishal Thakkar with us, who will give us a brief on factors to consider while considering an SME IPO. With 20 plus years of corporate experience, Vishal is focused on transforming business finances. He founded Cashology in 2021. Cashology is a champion for SME IPO and cash management and working capital management solutions for SMEs. Vishal has authored a few books which has been published by CNBC TV 18. He runs a YouTube channel, Finance Tube, which is having 65,000 plus followers. He is regularly featured on 80 Now program called Leaders of Tomorrow, which is a daily program specifically focused on SMEs. Vishal is also an adjunct professor at SP Jain School of Business, who teaches a global family managed business program. Hi Vishal, welcome to the discussion. How are you doing today?
Hi, Gowrishankar. I'm doing very well. How about you?
Doing fine, doing fine. So SME IPO is never showing the signs of slowing down. So far, we can see around 65 SME IPOs already listed. And last year, the whole year, we were around 2245 in the calendar year. While the markets went through a bearish phase, the fundraising is not looking to lose its steam. What is your take?
Yeah. See, SME IPO has emerged to be a dark horse. People are seeing value in it. People believe in the story. And the regulatory evolution that has happened in the SME IPO space is fueling the growth of the IPOs. So, as uh, this is new India. GST keeps evolving every 3 months. But we have seen in last 1.5 years, the SME IPO criteria and the regulation has evolved every 2 months. So I think the platform is having its own learning curve and it is becoming robust and robust by each passing day. So the regulator is also learning from the experience of how the companies are getting listed, and the investor confidence is uh, you know moving up inch by inch. So
That's great. So clearly, the evolution is fast track. So now coming to Cashology, Cashology is championing as a consultant for SME IPO. So what is your advice? When should a company firstly choose between equity versus a debt as a fundraising?
typically 85% of the SMEs survive on debt. And in India, the whole ecosystem since last about 4 5 decades have been structured in such a way that the entrepreneurs have been made comfortable with the process of undergoing a painful sanction and disbursement of a loan, whereby they would, give everything that they have as a collateral security, including personal guarantee, everything, just to make sure that they get money to run the business. Ironically, entrepreneurs are so used to this torture that if you give them the freedom of equity, they are scared. It is like a prisoner who has been in a dark cell for such a long time that he hates the light outside. And most entrepreneurs look at equity only when they run out of options of raising any further debt. Ironically unfortunate, but yes, the second generation of entrepreneurs that is now coming in, they don't have such kind of restrictive mindset, or they are not conditioned by the system to fall for the same trap, as I would say, which the previous generation fell into, and they are proactively looking at equity as options. Now, of course, some of them have gone to the other extreme, that they float a startup and they start burning money. And then everybody dreams of an IPO as an ultimate exit. So I believe at Cashology, there has to be a fine balance where you take equity money when you have a robust cash generating business model, because it de-risks you. It helps you to have a longer term vision. You are not under a pressure of cash flow, meeting the two ends every month, and you get robust long term partners who believe in your growth story and are there to support you for a longer period of time. But at the same time, I would give a safe harbor where each entrepreneur carries a fiduciary responsibility of managing this currency called trust, which now the investors will put in him, and not take decisions considering that money as somebody else's money. Because essentially, when you dilute your equity and get money in return for the same, you need to treat it as if it's your own money and exercise the same amount of checks and controls which you would when you would spend your own money. So I think it's a fine balance, and looking for equity is also one aspect which you have to remember is market timing. Every time market is not welcoming you to open an issue and it gets subscribed. So apart from your business need, market timing also plays a very important role. If you see, India has a structured growth story from 2021 because typically from 1960 to 80 it was Japan's time, from 80 to 2000 it was USA, from 2000 to 2020 it was China, and from 2021 at least up to 2040 it appears to be India growth story. So this is the right time to unlock the value of your MSME business and get yourself listed. Furthermore, because SME platform also has come up very recently, and we have seen some 1100 listings happening over its lifetime. And you will be surprised to learn, Gauri Shankar, that Sensex and Nifty has not gone into six digits, but the SME index has crossed 1 lakh, which means in last 10 years, the performance of SME index has surpassed both Sensex and Nifty put together.
And
This
moreover,
only talks about,
to add to your point, since the last year, if you say 1100 is listed so far, and we have already achieved 300, right? So, which means 30% of the listings has happened in the last 2 years itself.
correct.
That's right.
So I think market timing is right. I mean, I'm not indicating that make hay while the sun shines. You also need to have legitimate requirement of hay before you start making it.
That- So now, as you mentioned, the new generation of entrepreneurs is more open to considering equity as an option. So, at what stage is your recommendation one should choose between a PE funding versus an SME IPO?
See, I'll tell you, PE funding is required when you need something more than money. Two things that PE bring to table, which is not available in IPO, is one is measured growth because PE would then drive your finances, set financial targets for you, and make sure that you achieve those milestones before you go public. So, from that sense, PE puts money on the table, but with condition. IPO money comes more or less without conditions. You are free to do whatever you want. So, IPO should logically follow PE. That's what the book says. But I would say that if you are an entrepreneur who don't want to be bound by the traditional parameters of financial growth, if you are a disruptor, if you have a very unique business model where you need the liberty to do things which would not fit into traditional setup, yet your conviction is very high about making it to the other side, and I would suggest that an SME IPO gives you far more flexibility and freedom to use your resources compared to what a private equity would give. Also, the second point which I wish to mention here is the valuation bit. A PE is a strong player, comes with a lot of money, experience, might, power, and goodwill. Will obviously negotiate much better valuation, which would suit the PE rather than the company. And the company inadvertently would end up feeling shortchanged because the kind of value extraction that PE would do on its exit, the promoters generally feel that the deal we did out of desperation, because 9 out of 10 entrepreneurs will come and tell you that given a choice, I would never go to a PE because they squeeze so hard. But rightly so, it's their money and their dry powder is valued far more than the idea of an investor. So that's the ball game. So the choice is pretty clear. If you need more freedom and if you need better valuations, go for SME IPO. If you want somebody to guide you by the traditional parameters and you are okay with getting slightly lesser in terms of valuation compared to what you would get in an IPO, he would be the right choice.
That's great. That's great. And what is the minimum capital to raise an SME IPO? Is there any minimum
See,
benchmark that is set by SEBI?
there is no turnover criteria as such, but you need to be a profitable company. You should have profit of more than 1 crore in 2 out of 3 years, last 3 years. Your sales and profits have to be growing. Net tangible assets should be more than 3 crore. These are, and of course, you need to have positive net worth in 2 out of last 3 years. So basically, these checks and balances ensures that an SME IPO comes at a late stage in a startup or a family business, and not a very new company would just get access to capital market. And these are robust parameters which have been discovered over a period of time, because when we started 10 years ago, the criteria was even more relaxed. But as of today, when we are doing this podcast in May 2025, we see these are the conditions, and I still feel they are not very stringent. I mean, they are very easy to be met even by the S of the SME, the smaller companies today, given the inflation and the kind of things, not a very tough criteria to meet.
So if we have to go for an SME IPO, who are the different stakeholders who have a role to play in launching a successful IPO? Like, for example, a merchant banker is required, a consultant is required. So who are the different stakeholders?
See, I will list them down very quickly for you. Merchant banker, of course, plays the anchor role. Then you need a company secretary full time. It's a requirement of the regulator. But I think company secretary plays the most important role, because drafting of resolutions, legal stuff, everything is done in house from the management side by the company secretary. So the entire corporate governance hygiene, the strong pillar on which a public company stands, comes in through a company secretary. A full-time CFO is a must, because at the end of the day, capital market is related to finance. And unless you have a full-time CFO, you will not be able to do justice to just not just the disclosures and the compliance, but also the end use of funds. Then I would say there are legal companies, the lawyers who draft your DRHP and objects clause and the business plan. So those become very critical. Then there are registrars to the issue. And most importantly, company like Cashology or a consultant like me would play a critical role in putting together all of these people, because of my experience of doing 16 IPOs from the year 2005 onwards, 20 years in the market. We know whom to talk to, we know who will do what, and at what cost. So sometimes promoters who are not very informed, because of information arbitrage or convincing or marketing, they end up paying much more for raising the same amount of money. Sometimes, if they don't pay too much, they end up in wrong hands and their IPO never sees the light of the day. If they are lucky, it does see the light of the day, but it gets delayed too much. So, you need an anchor in your company who sits as a mentor or an advisor on your board and helps you create the board itself. Hire a merchant banker, company secretary, legal, registrar, and all of these relevant intermediaries to make sure that your SME IPO sees the light of the day on time.
So, as you rightly said, merchant banker plays a very, very important role in the entire SME IPO process. Okay, and if someone happens to choose a wrong merchant banker, the entire effort actually could go in vain, right? So, how does an SME entrepreneur ensure that he goes for a right merchant banker?
That's a very valid question, my friend. See, there is no wrong merchant banker or right merchant banker. Getting a merchant banking license is a big deal. You need to have at least 50 crore of your net worth to get a category 1 merchant banking license. So all of these guys are reputed. None of them are unscrupulous. Now, where does the issue happen? The issue happens where you don't get the right fit. What do you mean by right fit? Every merchant banker has its own flavor. Some of them are focusing on certain sectors, the others are not focusing on certain sectors. Some of them are sector agnostic. Others have preference to do only mainboard IPOs. They are not too much interested in SME IPOs. So what happens is that you need to find an experienced merchant banker from your sector.
And
These
that
are
is
the two
where
filters that you should apply.
and that
You
is
know,
where
in
an SME consultant also plays a role in choosing the right fit merchant banker.
yes, I think that's the most important role that a consultant would play. Plus, what happens is that it's a very complicated subject. All the financial jargons that we use, different valuation techniques and waterfall structures and very difficult words which promoters may not be from finance background. They may not understand or relate to these terminologies and may fail to get the complete picture or the repercussions on them walking few months down the line in the entire journey. And hence you need, it's like getting a translator. When you don't understand a foreign language, you need to have a local guy who speaks both the languages and is able to translate in letter and in spirit, because here one must understand and appreciate that IPO happens only once in a lifetime. If you raise money second time, it's called FPO. It's never called an IPO. It's a once in a lifetime activity, and hence a consultant's role is never underestimated.
Great. So once the IPO is launched, does merchant banker have any commitment or a lock-in period with regards to, for market making and ensure that there is an accountability and they have a skin in their game?
Okay, I will answer this. The regulation clearly states that we need to have a market maker for 3 years after the issue is gone live. Now, the general practice is that merchant banker offers one stop shop solution or a one package, that I will give you the merchant banking services, the underwriting services, the legal drafting services, also the market making service. But you may choose to have another market maker. It is not compulsory that the merchant banker and the market maker should be same. The idea of market making in SME IPO is very different from how the main board companies work. One is SME companies are measured as PAT multiple, not EBITDA multiple, unlike in the main board. Second is whoever is the market maker needs to stand with a buy quote and a sell quote. 90% of the time, the market is open. So if the market is open from 9 to 5, the gentleman has to stand with a buy quote, sell quote difference of 20%, at least from 10 to 4, 3 years. And for that purpose, when you see an SME IPO happening, a typical dilution of 25% is done to different categories of investors like your QIBs and your HNIs and your retail. But 1.25% is reserved for the market maker, because that equity is required for him to deliver those number of shares in case any retail investor wants to buy one or two lot. So, yeah, merchant banker would typically exit after taking his fee from the escrow account and then the balance money gets credited to the promoter's company. But if merchant banker is also acting as a market maker, his skin is surely in the game for next 3 years, and he continues to carry out that responsibility and his fiduciary interest in the company.
That's great. So in investment parlance, generally we advisors say that timing the investment is not possible. Whereas from what I understand, in SME IPO, okay, the entire game is around timing when you launch your IPO. Is does that hold true? If you don't get the timing right, probably the SME IPO may not be successful.
See, I would say it is partially true. Everything is not just dependent on the market time. If the company fundamentals are very strong, if the valuation is appropriate, and if there is money left on the table for the IPO investors, majority of the time your IPO will not fail because underwriting is anyways mandatory. But if promoters become too greedy, come up at a very high valuation, even in the best of the times, their share price will take a beating once it starts floating freely. So one has to get a fine balance between the fundamentals of the company, the valuation at which you are opening the issue, and the market timing. I think these three are the three major influencers for an SME IPO success. Because, and add to this, I had a very curious question asked to my merchant banker. We are opening an issue very soon, filing DRHP now. So, what happens to people who buy shares? Because if after the trading starts, somebody wants to sell, who will buy on the other side? Because we don't know who will buy, right? It could be anybody. So they say most of the SME IPO investors don't have too much of active trading like the blue chip stocks. People buy the story, they hold on to the story for the long term, and they aspire the SME IPO company to migrate to the main board after 3 years. And that is where the real value unlocking happens. So, from a promoter standpoint, we always advise the promoter that SME IPO is not your end game, it's a starting point. You can easily say miles to go before I sleep, the famous poetry. Yeah. So
So the ambition should be start with an SME IPO and then go for the main board IPO.
you can also have a preferential allotment in between the two, because once your lock-in gets over, you may want to take some money home because you have endured a lot in, I think, the 2 years preceding. So definitely some offer for sale can happen. At the same time, the newer investors should get an opportunity, get their pie in the growth story of the company, because the real excitement becomes manifested when the main board listing comes closer. As you see, a lot of these SME IPOs that got listed in last 2 years, next year you will see a lot of excitement because yeah, they are all due to then jump to the bigger ocean.
So as you mentioned that the transition should be aimed at from an SME IPO to a main board IPO, right? So would there be any difference with regards to compliance requirements as well as the additional cost of compliance when the transition happens, if at all?
A very pertinent question. First of all, if you are going to main board through the SME IPO route, you don't do any issue on the main board when you get listed there. It's just that your status gets upgraded. It's not automatic. The promoters have to fill in a form provided by exchange. Yes, there is additional compliance because in SME IPO you are filing your documents to the exchanges every 6 months. Now it becomes every quarter. At the same time, a lot of additional compliance burden comes to you from other regulators like SEBI, RBI, etc. Depending on what sector you are, but SEBI, yes, it is common and sector agnostic, and everybody is subject to it. So definitely, compliance cost also goes up, burden also goes up, but there is no issue as such. Your status gets upgraded.
So now coming to compliance, I would like to have one more point. From a comfort level perspective, is the forensic audit mandatory, or like if given a chance, is it good to have a requirement?
If you see, Gaurishankar, the due diligence itself is no less than forensic audit. I mean, it's so detailed, so robust. In fact, I got a due diligence checklist of 349 lines from my merchant banker. And when I wrote back to him stating that, Array, sir, we are doing SME IPO, not the main board IPO. He said, no. The recent meetings that I've had with exchanges, the requirement of due diligence at least is as stringent in an SME IPO as it would be on the main board. So I think forensic is not required. It will be too much of a burden to carry even further because already you are there. I mean, there is nothing that you don't know about the promoter's family, its company by the time you complete your due diligence. I would not encourage any further investigation per se on the company because already it is too much.
That's good. So in that case, I'm sure when it comes to retail investors' participation in SME IPO, they certainly should have a comfort level that an SME IPO company, whoever has listed, it has gone through all the checks and balances which is required by the regulator. Is
But
it?
don't you see that getting reflected in the allotment pattern itself? Most of the retail investors who understand and invest in SME IPO, their single most complaint is that they are not getting any shares.
That's good.
Because once you are able to go through such a fine filter of regulation and you have reached the other side, well, the only complaint is कि यार मेरे को shares नहीं मिला. And that is reflected in every issue that has come on the SME board, barring the ones which had regulatory discrepancies, and you have seen that SEBI and exchanges have stepped in just in time before the issue hits the public and have barred them from doing any funny business. So, the regulation this time is very, very proactive, and it is like the anti-drone defense system. They destroy the drones before they even touch the ground. So yes, Indian regulation has got S400 in their arsenal, I guess.
So that reflects that the SME IPO players, especially the investors, they are much more well informed compared to the main board IPOs. Right? I think that is what the reflection is all about.
You could say so in a way. You have to understand it in the right perspective. A main board IPO company would do much more disclosure than an IPO company, but a main board investor may not take so much of time, effort, energy, and interest to go and do a deep dive to the amount of disclosures that are done by the company. Whereas the SME story is short, sweet, sellable. An SME investor is a risk taker because there is a lot size. It's not that you can buy one share.
That's
So, anyways, he's putting his risk capital, and understanding a smaller company is far more easier compared to those gigantic companies raising thousands of crores. Because for retail investors, those numbers themselves are mind boggling. You talk in terms of 2 lakh, 5 lakh, 10 lakh, a retail investor is able to relate. But bigger companies, it's very tough for them to get the understanding.
that's great. That's great. Thank you, Vishal. Thank you for enlightening us with the benefits of SME IPO. Cashology, especially, you have did 16 IPOs. All 16 IPOs have been successful. We wish that that 16 becomes at least 10 times in the next 2 or 3 years. That's great.
Sometimes once in a day it is said that whatever you say, God listens. I hope this was the statement that he heard, and let's see, if we could achieve what you have set out for us.
That's great. That's Thank you, Vishal. Thanks for joining. Thank you for joining.
My pleasure, my pleasure.
Thank
Yeah.
you.
Bye
We wish
bye.
to have many more podcasts like this in the future in the benefit of the investors' interest.
Would love to participate whenever time permits, to you and to me both. And we are always happy to help out investors in any questions that they have, because we believe sincerely in the fact that trust is the currency on which the market thrives, and we wish to hold the valuation of that currency to the highest level possible.
Yeah.
That's my message to my listeners. Thank you.
Thank you, Vishal. Thanks for joining.
Yeah. Thank you. Bye bye.
Bye bye.